Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Russ Flicker on the line, and he's a founder and managing partner over at AWH Partners, and this is part of our iConnections New York series, where we bring you the best of those that participated and attended in iConnections in New York and beyond. So first thing first, Russ, welcome to the show.
Thanks so much for having me on the show, Adam. I really appreciate it.
All right, so definitely want to get into AWH Partners and really what you're up to in your fund, and we got a couple other things to talk about too. But before we do that, iConnections New York, talk to me. How was the experience? Have you been before? Give me some of the backstory.
This is my first time at iConnections in New York, and I thought it was great.
Welcome. That's awesome. Go ahead.
Yeah, thanks. Yeah, you learn a bunch at the panels, which I really enjoy, but then also get to have these one-on-one meetings with a variety of interesting investors. So I thought it was very positive.
That's awesome. So AWH Partners, obviously you're in the financial industry. We'll get into that in a moment. But how'd you get started? Where'd this start for you?
Yeah, so we started right in the Great Recession, and myself and my two partners were at institutional firms and tried to decide
2008, 2009-ish, or?
Exactly. In 2000, it was sort of early 2009 where myself, one of my partners was at the Blackstone Group with me, a third partner was at the related companies, and I'd say the golden handcuffs weren't quite as golden at that point.
Yeah, I got it. That's interesting. So obviously nobody's I'm not happy that, we have these big downturns, but new things come, new ideas, right? And what gave you the confidence during that time? Maybe there's a piece of necessity, but still to go out and head on this path, it's not an easy choice to make.
It's true. But we got really fortunate. But the reason we decided to go after the hotel business at that point, the pullback in RevPARs, in revenue for hotels, was the largest we had seen in 100 years. We didn't know COVID was coming, but at that point, it was the biggest pullback. And so we decided to take advantage of that reset in hospitality.
Now, was that your specialty prior, or was this just a numbers decision? Hey, there's something here.
So it was a specialty of mine and my partners. We had also done a few other asset classes, but we did have this expertise in hospitality, and so we decided to take advantage of it.
So numbers, of course, that's a given, and then you'd work in it. But why hospitality? What interests you about that industry, just in general?
I think the interesting part about hospitality is twofold. One, from a personal level, it's fun to work on hotels because they're interesting and dynamic businesses that have, both an operating business and a real estate angle. So they're fun to work on and underwrite and evaluate. The second piece is, hotels, because they are so complicated, they're less a commodity product. We believe you can be better or worse at it, and we think we're better.
Yeah. When you say less a commodity product, I think that's a good transition to get into AWH Partners. So maybe before we go further, just kind of give us an overview of the firm in general and what you do.
No problem. We're a vertically integrated hospitality company. So we acquire hospitality, but we also, in addition to the investment arm, have a development arm that handles mostly big repositionings and renovations, but project management, project accounting. And we also have a management company called Spire Hospitality that runs the hotels for us. So all three legs of the stool, all working together to buy, renovate, operate, and sell hotels.
So let's say let's fast forward to COVID for a moment before we go further. So Great Recession, you started, you got this thesis, numbers are right, we hit COVID. What happens next for you? How do you stay in business? How do you keep this thing going?
It was so challenging. I would say, ironically, it was so bad that emotionally it was a little bit easier to handle because we were having calls with investors when most of our hotels were by law shut down. And I remember distinctly on some of these Zooms where investors said, that doesn't sound good. And we had to say, no, I just want to be clear. It's not good. It's catastrophic. If our hotels stay shut, we still have costs. It's a total wipeout. And in the heart of that, it was so bad and clearly not driven by us that I think investors appreciated the transparency. And luckily, it didn't last forever, and we were able to start climbing out.
Man, what a time period, especially for individuals that were in that space specifically. I feel like I know just, friends and otherwise was not an easy time. But now on the other side of that, there's this boom, right? Talk to me what happens next.
Yeah, so the hotel business has been It's been challenging since COVID, but for totally different reasons, to your point. We had the 2 or 3 years of sort of, COVID-related challenges. But as we started to pull out of that, interest rates climbed and costs climbed, like payroll costs and all those things. And so from an investment standpoint, it's been a very weird time in the market with less transaction volume. That being said, also a lot of less new construction, a lot less supply. There are areas in the market already that are experiencing very high RevPAR growth. New York City is an example of that. But we do see this as being a really interesting time in the market because it's had such low new supply based on historical levels for years.
So a quick sidebar question here, if you will. When you talk about cost rising, things like this, at this point, is AI affecting you at all? Or pro or con on that? I'm just curious, or is it just not caught up yet?
So from an investment standpoint, I think AI right now, there are places where the market and the tech market is robust because of AI investments and also related pieces. So we do see hotels experiencing some of that benefit, whether it be on group rooms, et cetera. From an operational standpoint, from running our business, AI, data, and tech is a very big component that we're very involved in.
Yeah, I figured that, and you figure at some point, it's got efficiencies, whatever it is, like marketing side, it just hits the whole, supply chain in one way, shape, or form at some point, right? Even when we don't necessarily, maybe I'll speak for myself. Maybe when I don't even know it's like I'm benefiting from it. It's like, oh, all of a sudden things are starting to work. Like maybe it's a software, who knows? Just small things, and all of a sudden it works, and it's like then I have to stop for a moment and like, wait a minute, this didn't used to be that good. They're getting their stuff together, huh? That's awesome. Absolutely. So talk to me about 2026. What makes it the right time in the hotel market to start getting involved and to start maybe deploying some capital?
Look, when we look historically back, and we've seen these themes before, but even in the Great Recession, as we were chatting about, the Great Recession happened 2008, 2009, but 10 and 11, and even 2012, didn't have high transaction volumes. And so it did take a little while. Now, this is a very different cycle than that was. But, to steal from someone, it sort of rhymes, that history rhymes. And so what we had here is post-COVID, a period of extreme interest rate increases and cost increases happened. And that led to multiple years of lower transaction volumes. But it sows the seeds for growing transactions and growing RevPAR because of this not only multiple years of not buying or selling hotels across the industry, which means a lot of investors have hotels for much longer than they want to have them for. So there's pressure there. And also less supply of new hotels for multiple years now across many markets. And so what that's led to is, I think, this sort of bottleneck that is just starting to break free. It's not going to be a deluge overnight, but we do believe over the next 12, 24 months, we're going to see more transaction volumes, and that means better opportunities to buy.
Talk to me about AWH Midas. I understand you recently launched the platform.
Yes, we did. I mean, look, everyone is using AI, and we're included in that. What I think one of the differentiators for us, and there's really two components. One is we've leaned in very heavily on the tech side for years, even pre-AI, and now are using AI-enabled tools across our platform to get better decision-making. But also, what's really the engine for us driving that is we have better data. So we've been collecting proprietary data for over a decade now across hotels across the country. And so what that does for us is, in addition to all the data that everyone else has, and we have sliced and diced it and mapped it out so that it is very usable. And so AI and our engine, AWH Midas, can use that data for better decision-making. When we're looking at a hotel, it might be the third time that hotel has traded in the last 17 years we've been in business. And so we're able to see things like that and follow trajectory of submarkets and markets, of brands, of assets, and see where should this margin be? Where should this RevPAR growth be? How do we evaluate that? And I like to think of it as moving as much from the subjective to the objective. It's never going to be all objective. You're going to need to make decisions on investments. But the more of it that we can line up using real historical data and even forward-looking data at the right point of decision, the smarter we can be.
Earlier, you mentioned like one of the reasons that you were attracted to this particular niche or industry was, maybe the inefficiency of it. So if you can kind of combine, what you're doing with your language model, and if you combine that and the learning that's going on with maybe the inefficiency, that's where the overall opportunity can be more dependable. Am I off on that, or like, can you go a little bit further?
No, you're absolutely right. It's a great point, and it's the right way of thinking about it, which is by using all this data, we're able to compare hotels that we're bidding on today. And we bid on, hundreds and hundreds of hotels a year, and we underwrite, more than that. And so what that lets us do, though, is to say, these hotels, how do they compare against the thousands of other things we've seen? And it helps us because the market is not efficient, and because some hotels are managed very poorly, or some of them are capitalized very poorly, or some of them are in very tough markets where you're not seeing that growth that you should be seeing, et cetera. And we're able to evaluate that against so many data points that we're able to pick out those hotels with a great opportunity for us to either fix them operationally, physically, or for their markets to correct, a market that we expect to see more significant growth. And because it's not efficient, there are opportunities where hotels are performing very differently than they should. And so our data and tech, what it does for us most often, is it makes us like hotels less and not want to buy a hotel. But when we find a hotel that we do like, we can have real conviction.
Now, I don't want this to come across as like a loaded question, but you can answer it as you like, whether you want to be specific or in like general framework. But speaking of the hotels and making offers on these, like what do you like? Like what? And obviously it's pretty broad, but like what makes it an attractive deal from the point of, okay, this looks right, to where, okay, we want to like seriously get into this one if possible?
Yeah, great question. So there are two elements to that. One is we're looking at hotels that are going to have good future growth. And the way we evaluate that is we've got a proprietary algorithm that uses rolling 10-year revenue, 20-year revenue growth historical. It maps forward-looking supply data, forward-looking data on economics and the growth of the market that helps us come up with what we think this market, or actually it's sub-market by sub-market, how it will grow going forward. And so we look at we want good growth in the market. We want the hotel, based on its brand, its performance, its physical product, to be one that we believe has good prospects going forward as well. And then the other piece of this is, and this is another interesting element, which is we need it to look like it's going to do well in the future, and we need it to be priced appropriately. It needs to be obvious how we're going to fix what's going on, or if the seller is not selling for the top dollar. Because if information was perfect, if everyone agreed on exactly what it would do in the future, it'd be harder to buy something at a better return because everyone would know the answer. And the beauty of the hotel business is there's so many variables. And so that if we can have conviction on our variables, on our numbers, very often, or often enough, let's say, there's an opportunity to buy something that makes sense.
Yeah. Russ, this has been a lot of fun having you on the show today and learning more about what you're doing over at AWH Partners. One of the things I definitely like is going through, multiple market cycles and seeing, I think, from the Great Recession, which was all real estate related primarily, or at least the catalyst, and now COVID, all that. So you're battle worn. Is that the term, Russ? I try not to get too fancy with the words over here. I'll misquote everything. Like, Adam, what are you talking about? That being said, yeah, it's been a pleasure, Russ. If they want to learn more about AWH Partners, how do people connect? How do they follow up?
Yeah, I hope they get in touch with us. I mean, certainly you go to awhpartners.com, or you can actually try out AWH Midas, see what our pipeline has in store and what we're doing, or just contact us. We'd love to learn more and chat with people. That's the business we're in.
Wonderful. And for everybody listening, just so you know, we'll definitely put some links in the show notes, so you can just click on the links, head right on over, connect with Russ and his team. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. You heard me correct. Each and every day we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So we don't want you to miss a thing. Hit that subscribe or follow. And Russ, thanks again for coming on. It's been an absolute pleasure.
Thank you so much, Adam.